Good day. The government is taking unprecedented steps to help businesses with their finances during these challenging times and has delivered an economic stimulus package worth hundreds of billions of pounds. One of the most significant measures announced is the Coronavirus Job Retention Scheme, and this promises to support employees who are furloughed by paying a proportion of their wages, freeing up money for businesses to help with their cash flow. There remains a lot of confusion and uncertainty around this new scheme, and so to help you get to grips with this landmark policy, we've decided to answer some of the key queries we have received. The Coronavirus Job Retention Scheme is a temporary scheme open to all UK employers until at least the 30th of June 2020. It's designed to support employers whose operations have been severely affected by the coronavirus. Employers can use a portal to claim up to 80% of furloughed employees' usual monthly wage costs, up to £2,500 a month, plus the associated employer national insurance contributions and minimum automatic enrolment employer pension contributions on that wage. Any UK business organisation with employees can apply for the scheme, including businesses, charities, recruitment agencies, provided the workers are paid through the PAYE scheme, and public authorities. However, you must have created and started a PAYE payroll scheme on or before the 28th of February 2020 and have a UK bank account to access the scheme. The scheme applies to employees on a leave of absence, referred to as furloughed workers. These are employees who are on the payroll, but who might normally be laid off or made redundant due to lack of work. To be eligible for the scheme, an employee must have been on the employer's PAYE payroll on or before the 19th of March 2020, and HM Revenue and Customs must have been notified of a payment through real-time information by that date. This scheme covers full-time employees, part-time employees, employees on agency contracts, and employees on so-called zero or flexible hours contracts. To be eligible for the subsidy, an employee must not undertake work for or on behalf of the organisation. This includes providing services or generating revenue. However, they can undertake other voluntary work or do training as long as it does not generate any income for the business. If the employee has been employed for a full 12 months prior to the claim, you can claim for the hire of either the same month's earnings from the previous year or an average monthly earnings from the 2019-2020 tax year. If the employee has been employed for less than a year, you can claim for an average of their monthly earnings since they started work, and those who started in February should have their pay calculated on a pro rata basis. As an employer, it is your responsibility to calculate how much of an employee's salary you can claim for, including the amount of employer national insurance contributions and minimum automatic enrolment employer pension contributions that you are entitled to. Yes, directors of a company can be furloughed. The guidance provides an exemption for company directors who are also furloughed employees to carry out duties relating to the filing of company accounts or provision of other information relating to the administration of the director's company. This may include company's house submissions and other statutory duties. During this period, directors should be careful to avoid anything, however, that could be mistaken for work, including posting promotional material on their own social media feeds. The government has provided detailed information about how the CJRS will work for contractors working within the scope of the IR35 off-payroll working rules in the public sector. The guidance states that it may be appropriate to furlough IR35 contractors deemed employees in a small number of cases. The public sector organisation would then have to confirm this with both the contractor's personal service company and the fee payer, and agree between the parties that the contractor will not carry out work for the organisation during the period of furlough. The fee payer, usually the agency that pays the PSC, will have to apply for a furlough payment of 80% of the monthly contract up to the £2,500 per month cap, and the employer national insurance contributions. The fee payer will then need to pay the furlough payment in respect of wages to the PSC via PAYE and make the necessary tax and NIC deductions. The PSC will have to report the payment to the contractor as deemed employment income via PAYE using box 58A on the PAYE real-time information return. If a contractor opts to furlough themselves as an employee or director of their PSC, and they're still receiving an income from a public sector organisation, including through the CJRS, they must deduct this income from their reference pay for the CJRS. Anyone on an employer's payroll on the 28th of February 2020 and notified to HMRC on an RTI submission on or before that date who stopped working for their employer prior to the 19th of March 2020 can be re-employed and furloughed, including those who left the business voluntarily. Additionally, new employers since the 19th of March 2020 can claim under the CJRS if either the TUPE or PAYE business succession rules apply to the change of ownership of the business. Groups of companies that have consolidated their payrolls into a new PAYE scheme after the 19th of March 2020 can also furlough employees and claim under CJRS. Unfortunately, this scheme does not cover fees, commissions and bonuses, but an employer is still free to pay those in addition, should they wish. Employees who are currently off sick can be furloughed for business reasons and moved from statutory sick pay to furlough pay. Employers have discretion as to whether to furlough those on long-term sick leave or to continue to pay them statutory sick pay. If an employee becomes sick while furloughed, it is up to the employer whether to leave them on furlough or to move them to statutory sick pay. Furlough cannot be claimed at the same time as statutory sick pay. Employees who are shielding in line with public health requirements or who are staying at home with someone who is shielding can be furloughed. Previous versions of the guidance stated, if they are unable to work from home and you would otherwise have to make them redundant. This requirement has now been removed. Those who are contractually obliged to enhance maternity, adoption or shared parental pay are eligible for the scheme, but those on statutory maternity pay are not. They will be paid in the same way and cannot be additionally furloughed. If an employee is working but on reduced hours or for reduced pay, they will not be eligible for the scheme and you will have to continue to pay the employee through your payroll and pay their salary subject to the employment terms of contract that you agreed. Before making a claim, it is important that employers communicate changes with staff. Employers should discuss with their staff and make any changes to the employment contract by agreement. In order to evidence this change, employees should be asked to sign a written agreement, and there must be a written agreement confirming that the employee will cease all work in relation to their employment. Where a business or organisation is furloughing a large workforce, a consultation may need to be done on a collective basis. The employer must then submit the following information to the HMRC via a dedicated portal. Your employee PAYE reference number, the number of employees being furloughed, the national insurance numbers for the employees you want to furlough, the names of the employees you want to furlough, the payroll and works numbers for the employees you want to furlough, your self-assessment unique taxpayer reference or corporation tax unique taxpayer reference or company registration number, the claim period, start and end date, the amount claimed per the minimum length of furloughing of 3 consecutive weeks, your bank account and sort code, your contact name, and your contact telephone number. You can only submit one claim at least every 3 weeks, the minimum length an employee can be furloughed for, and these can be backdated until the 1st of March 2020. Existing employment law continues to apply and should be carefully considered when changing an employee status so as not to discriminate. Once HMRC has received your claim and determined that you are eligible for the grant, they will pay it via BACS payment to a UK bank account. A claim should be made in accordance with actual payroll amounts at the point at which you run your payroll or in advance of an imminent payroll. You must pay the employee all the grant you receive for their gross pay. No fees can be charged from the money that is granted. The Chancellor has announced that he expects the first grants under the scheme to be paid imminently, but more detail is expected soon. This scheme is just one of a number of measures that the Chancellor has announced to support businesses. Our team is here to help you with the administration of the scheme within your business, and can also help you to collate and submit the records required to make the claim. We understand that certain elements of this scheme are complex and require careful calculations. So please feel free to contact us today to see how we can help you and your business. Thank you.